Welcome to Mr. Zero to Infinity. It looks like the channel subscriber total and portfolio value continue to grow to infinity starting at zero. Thanks for all the support. If you subscribed in the last couple of weeks, you're in for a treat for episode 40. Let's pull up the stock portfolio that I've been growing from zero, starting with episode 1. If you've been following all my episodes up until this point, you already know my personal investment strategy of finding growth stocks to increase the portfolio sooner rather than later. Keep in mind, I am not a financial advisor and all my videos are for entertainment purposes only. Always do your own research and never rely on any of my personal thoughts, opinions, and commentary on finding the latest trends to build wealth in the stock market. Before I get into the 3 undervalued stocks that I'm buying in May 2020, I just wanted to discuss one big item, the gain loss at the time I took this screenshot of the portfolio. The stock portfolio is up about 35% since we started the journey, and the total gain is over $1,300, which is still a very small amount in my opinion, especially when I look back on this episode sometime in the future. Many hedge fund managers try to outperform the stock market or the S&P 500 index each year, but that's not my goal. I have my own unique performance goals and a much longer time horizon than just 1 year, just 2 years, or 5 years. If you're looking for those big returns like me, then click that like button and maybe subscribe since it sounds like we're on the same mission. Looking at the screenshot of the portfolio, Fiverr International is the top performing holding in the portfolio at this time. My cost basis was a little over $1,000 and the stock already doubled since more and more investors are noticing the growth opportunity in the freelance industry. Let me set some expectations. Stocks don't just go up, they go sideways and they also go down. At a cost basis of $27.18, I'm in a unique situation with my unique cost basis, which is if I add more shares at a higher price, the cost basis will go up rather than down. Be careful and don't get burned. Always do your own personal research. I'll be monitoring the technicals on Fiverr stock over the next couple of months to see when it makes sense to continue to add to my small position. The goal for all of my positions is to be over 5 figures or $10,000 plus compared to just 4 figures or $1,000. Mr. Zero to Infinity likes adding those zeros and he has plenty of time to wait it out. He thinks the portfolio will be much higher in the future compared to right now. Apple is my next holding that's up over 25% and the stock portfolio received its first dividend payment. As explained in earlier episodes, I look for growth stocks with upside potential, and if you throw off a quarterly dividend, that's just a plus since I have some more money to work with when adding more shares of stock. I'll be looking for buying opportunities as the weeks go by. If you're wondering, I don't use the reinvest dividends feature since I prefer to have personal control over the stock price of any shares of new stock. Sometimes I may think a stock in my portfolio is running up too high, and if I don't have plans of selling, why would I want to reinvest the dividend payment for my shares at levels I think are high? That just doesn't make sense in my opinion. So let's begin with my list of 3 stocks that I personally think are undervalued. First, let me define what undervalued means to me. Undervalued from my perspective means the stock has growth potential long term, meaning when I look back 5 to 10 plus years in the future, I think the stock will be higher than today's value. Does this always work out? Nope. I know I'll have losing stocks on the journey to infinity, but my goal is to always limit the amount of losing stocks as much as I can. If my bull thesis changes on any of my stocks, I will eventually sell and take losses when the day comes. Up to this point, I have yet to sell any stocks since the portfolio is still only 6 figures or under, which is $100,000. When a stock portfolio goes over $100,000, my portfolio management style will eventually evolve when it comes to profit taking. So first stock, we have Penn National Gaming, which is already in the stock portfolio. Stay tuned for my 3rd stock since it's a new name. Penn National Gaming has some competition with DraftKings officially trading on the stock market under DKNG stock ticker. I've discussed my thoughts and opinions of what I like and don't like about DraftKings in my last episode. Main reasons I plan on buying more shares of PENN Stock in May 2020 is because of my market cap eye test strategy that I personally use. At this time of the recording, take a look at the market cap for DKNG stock and then look at the market cap for PENN Stock. In my opinion, I think the gap is too big even though PENN doesn't have a proven smartphone app which is expected to be released later this year. Based on my research, the app is expected to be called the Barstool Sportsbook app. My bull thesis for Penn National Gaming's growth potential revolves around the success of this app and the implementation of the Barstool brand around all the Penn properties, unlike DraftKings, which is just the technology at this point. Will that change? You never know. All I know is that if I was a casino stock with an infrastructure in place, I'd be monitoring DKNG closely. As you follow along with my past and future episodes, you'll learn that I like technology stocks since I know how to value the potential, unlike a lot of investors without any real knowledge of how to use apps on a smartphone or websites online. Many investors get caught up in today's value versus the potential future value, and they try to time the market. For this reason, I prefer the motto of time in the market versus timing the market, since I'm willing to wait years and even decades for my bull thesis to come to life. Now, on to the second stock I think is a top stock for May 2020, Starbucks. You'll notice Starbucks is my smallest position. I haven't really added to the position since there has been a lot of uncertainty with the shutdowns and closures going on right now. I mentioned a lot of my reasons why I personally like Starbucks stock, so for this episode, I like to highlight the dividend yield. I like Starbucks because it pays a dividend. You and I already know the past dividend history doesn't guarantee future dividend payments. There are a ton of stocks that cut their dividend because of solvency issues, and I think CEO Kevin Johnson is capable of weathering the storm and making sound financial decisions to the balance sheet in the coming years. Starbucks is a company and a brand that I think is positioned to grow its digital delivery business and its opportunity to expand to more and more stores around the world. You all know I like global brands. There's not much more to add on the bull thesis. Starbucks is a coffee company that I believe has one leg up on the competition. It's a company that constantly innovates and stays on top of the latest technology. And talking about technology, that leads me to my third stock, which is a new name, Square or SQ stock. I already made a video on this, but I think CEO Jack Dorsey is onto something big that a lot of investors are overlooking with the Cash App platform and the opportunity with Bitcoin trading. It seems the majority of my friends only have the Venmo app, which makes me like Square even more. I want to buy a stock before it pops and trends big time prior to all my friends having it downloaded. It's amazing what Jack has done with the company these last couple of years, and I'll be happy to be a part owner of a company that is on top of innovation. Square stock is a company that I think can continue to expand globally over a long time horizon, which meets my personal investment goals. I pretty much covered a lot of the points I really liked about Square stock in an earlier episode. When the time comes, I look forward to being a part owner of Jack Dorsey's vision. I will probably build a position slowly since there's been a lot of volatility in the overall stock market with stocks continuing to go up at this time. Any signs of a stock price pullback in Square or any of my stock holdings will be looked upon as a buying opportunity for me this month. My goal is to always get the lowest cost basis possible prior to my stocks exploding up in the future. Kind of like what Fiverr International did the last couple of months. Lots of stocks on my research board, so stay tuned for next episode. Let's end it there. Play the music. As always, this episode is not intended as investment advice. Do your own research prior to making any investments and do your own fact checking. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment purposes only. Maybe I didn't earn your subscription with this episode, but there's always next episode. It's free to subscribe, and a couple of my favorite comments from last episode are on your screen. Feel free to click on some of my earlier episodes if you enjoyed this video. Wait until you see what's coming with the Mr. Zero to Infinity Instagram page. Get in early. Thanks again for watching. Let's keep building from zero to infinity. You got this.